What's up, you guys? It's Henry, and today Airbnb options started trading. This is a good time for me to discuss some best practices when it comes to trading options and how to make a profit on a volatile stock. I'll be giving you guys 3 parameters you will want to be aware of, and then I'll tell you 3 strategies that you could use depending on your view on the stock. And then I'll be placing a real life option trade just so I can educate you guys and show you what putting a trade into Robinhood would look like. Understanding options and at least how they work is important before placing a trade. So here goes what you need to decide on before placing a profitable option trade. Number 1, you need to decide which direction you think the stock is going to move. This is one of the most important decisions you will have to make because the most common option strategies benefit from a stock rising or falling. For A, B, and B options, as an example, it is an IPO stock and has a lot of volatility. In my opinion, an IPO stock in the end of 2020, specifically after a year of positive returns on nearly every IPO that is pushed by YouTubers and Wall Street Bets, can see a huge rise, and those IPOs have been very successful. However, the flip side of things is some people believe that the stock is overvalued, as Airbnb stock closed at $144 per share after IPOing at just $68 per share. Whatever direction you believe the stock will go will impact whether you buy a call option for upside gains or a put option for a decrease in the stock price. For now, I'll just discuss buying options, and later in this video, I will discuss selling options as well. Sometimes you can be right on the direction but not make money. I'll explain why that could happen in this video as well. Let's move to the next decision you have to make before I get into that. Number 2, you need to have an estimate or prediction how high or low the stock price may go. And that's because stock options have something called a strike price. You guys know that a strike is the price that a stock option will be upon expiration. Now guys, you can be right about a stock moving from 100 to 110, but it doesn't matter if the price doesn't make sense at the end of the day. And if a stock, for example, moves upwards to $110, but you buy 110 strike that costed you $10, then you didn't make any money, because 110 strike plus $10 would mean that your break even would be 120. However, the stock went from 100 to 110, so you did not make any money. In fact, you lost money because the price you paid was too high. That's why your second most important decision before trading options is how high a stock is likely to go. If you think it can really skyrocket, then you can purchase a call option. If you think it can go above your strike and premium, and those 2 things must be true, because otherwise you will lose money on buying call options. Number 3, guys, this one is also important. You need to determine the time frame in which the stock is likely to move. If you bet a stock will double in 3 months, but you buy an option for 1 month out, well, you didn't give yourself enough time, therefore you won't be successful. With options, they're tricky because you have to be right on direction, how much in that direction, and how long it will take. It sounds very complicated, but it's not that bad if you're an option seller, which I will discuss in the strategies that I use and the ones that I teach in the Weekly Option Income Academy. So now you guys know there are 3 important decisions you need to make before entering a trade. Let's jump into my top 3 strategies that I would use right now. If you guys follow Palantir, you know that the stock has recently exploded in value, and the stock has absolutely been on a tear and on a rampage. So if you think Airbnb can have a similar move to Palantir or another high growth stock, buying some calls can be a very profitable thing, because the stock will go above and beyond the strike and premium that you pay for the call options. This is my least favorite of the 3 strategies I'm going to discuss. The reason is when you buy options, you're spending money. I generally know from coaching and working with many students who now make money after taking my course that they're buying options and losing more often than they are winning. The reason that happens is because right off the bat, you're spending money hoping to get a return on your investment, and you need the stock to make a significant move before you can break even. The strategies that I might use and I teach that I would do on Airbnb or another stock that I like but not 100% certain on is a covered call strategy. Covered calls involve buying 100 shares of stock, and then rather than buying a call option, you instantly sell an option and collect income from selling that option. This way, you're selling a call that is secured by the stock that you own. Now you have stock that you own, and you're able to generate income, solid income, especially on Airbnb, while you own a stock that you like. Beware, the downside, if you can call it downside, is that the stock goes above your strike and you must get rid of the stock for a higher price. But that is not a bad thing, guys. It's not a bad thing to get rid of a stock that is higher than you bought it for. The other downside is, of course, the stock falls on you. However, if you look at yourself versus a regular stock investor, even if the stock falls on you, you're still in better shape because you ended up collecting a premium and creating a margin of safety for yourself. Unless you thought the stock was going to skyrocket to begin with, in which case you would just buy calls to begin with and you would not use a covered call strategy if you really thought that this stock was going to skyrocket 30, 40, 50% or something like a Palantir stock, then you would just go ahead and buy calls. If you want to watch a video on buying calls, you can check out the pop-up right on my right here above me. My third strategy for a high growth stock that I think has upside but could also fall and seem slightly overvalued is selling put options. With all three strategies I'm discussing, they're considered bullish strategies or strategies on a stock that you expect will stay flat or rise a little bit. Of course, if you think a stock will fall a lot, then you can simply buy puts and profit from the stock falling lower. Now, what selling puts specifically does is it generates income for the obligation to buy the stock should it fall lower. And the trick is, if it falls lower to a price that you would like to own the stock anyways. Therefore, you cannot be in a bad position selling puts if you want the stock at a lower price to begin with. Now what I'm gonna do is I'm gonna pull out Robinhood. I'm gonna make a trade based on my belief on Airbnb stock and kind of see what I can do for you guys in terms of educating you on buying or selling options. All right, guys, so here's Airbnb. This stock is a great long-term stock. As you guys know, if you haven't checked out my video right here, I talked about Airbnb's future. I think it's a great gig economy stock. And basically looking at the chart here, we don't have a whole lot of information. That is not a good thing as a trader because you want information. The more information you have, historically especially, then you can understand volatility a little bit better, you can understand direction a little bit better, but Airbnb has only been on the market for pretty much just a few days, less than a week. It IPO'd on December 10th and it started trading pretty much at a very high level. And since then, the stock has been coming down just a little bit, especially, on December 14th, starting this week. The stock has come down quite a bit to the 120s level, and it just never broke down under 120. Now, however, we're touching 130s and even 140s again. I don't think Airbnb is going to skyrocket though past $140 per share, so I don't think it's going to be reasonable for me to do a covered call strategy or for me to buy calls on this stock, just because I don't think this stock is going to skyrocket short term. I said long term it may, but short term it looks a little bit pricey for me. So I'm actually going to be buying a put here for you guys. And I want to show you what buying a put option would look like. And essentially buying a put option, all it is saying, hey, I think the stock is going to come down from here to here. I'm going to show you what that looks like. So I'm going to click trade Airbnb option and I'm going to click buy puts. Okay, guys. And the expiration of December 18th is just a little bit too soon. It only gives you guys 2 days of trading. So I'm gonna go to January 15th, which is about 30 days or 31 or 32 days of trading. And as you guys can see, these options are very expensive. I mean, $1,400 for an at the money option is very, very far from cheap. It's in fact 10%. And the reason it's so expensive is because this stock is a brand new stock and it has a lot of volatility. Investors are not sure what's going to happen yet. And for that reason, I don't really want to do covered calls because this stock could fall a whole lot. What I'm about to do is not a safe strategy. However, it's an interesting strategy on a stock that has a lot of volatility. And I just think that maybe this could make some money. It's very different from what I usually do. I just want to show you guys for educational purposes what I am going to do, but what's going to actually happen is going to be determined on other investors and the market as a whole, because here what's going on is I'm going to open a $120 put option and I don't really know if the stock will go down to 120. And in fact, you guys can see here that the break even is $112.60 because I have to pay $740 just to open this position. Now, opening this position means that I have to spend $740 and bet on the stock falling to 120. However, my break even is 112 because the strike minus the premium that you pay is your break even price. So here I'm going to be buying a $120 put option. Here we go. And guys, I'm just gonna say right here, there is no open interest because today is the very first day of trading options for Airbnb. The volume is 540, meaning there's 540 contracts being traded in total for the day. The bid is 740 and the ask is 760. That is why I'm going to be in the middle at about $750. So here we go. I'm gonna enter this trade. Here we go. There we go, guys. I placed this trade. It didn't get filled yet, but I'm actually gonna leave it for the day because I expect the stock to have a lot of volatility, and within the day, it may get executed, it may not. However, I don't wanna pay any more for that put option, so I'm gonna leave that order open and see what happens throughout the entire day. All right, guys, as you can see, I ended up buying a put option on Airbnb because I thought that Airbnb was a little bit expensive, and in the short term, I see the stock pulling back, but in the long term, I would be an investor in the stock. However, at this price level, double what it IPO'd at, I just don't feel comfortable doing any of the 3 strategies that I discussed. So instead, I ended up buying a put option, which I usually don't do, but I wanted to show you guys what that would look like. Thanks for watching. If you need more help with this, you can DM me on Instagram, or you can just check out the Weekly Option Income Academy, where I teach all of these strategies plus many more for you guys so you can generate consistent weekly income. Either way, I hope you guys are staying aggressive in learning and enjoying my videos. I'll see you guys in the next video. Give me a fist bump.